What is going on, guys? Welcome back. Commentary for you. Veterans of the channel will know if there's 3 videos in a day, one of them has got to be about investing, and I've got a huge investing video for you today. Before we get into this, though, you guys know I am a Webull Preferred Influencer. Use the link down in the description. Deposit more than $100, just like I did. You will get 4 free stocks, valued at greater than $21. If you just open an account, they will give you 2 free stocks. And as you guys have seen, the free shares from me have grown my portfolio from just about $125 to over $2,000, although we've got a lot of great growth in dividend payers. And speaking of those dividend payers, if you look at my next 12-month projected income, $71 means if we can stay on pace for just another 6-7 months, we could easily have this account pay for itself in just about a year and a half. Now, with that said, you can see ARKK talked about wanting to add this ETF to the portfolio, finally did it, and I want to talk about some of the challenges I experience that I handle much differently now that I've invested in the market for some time. First of all, Legal & Pharma was one of the free shares we got. And when was I going to sell these two? You know, I sold one yesterday for $104, and I had to make an assessment as to when to sell the other one. You know, you can sell high, you can sell low. You obviously want to try to sell higher more of the time than not. But when I looked at this and I saw the trends, you know, the last month, we got kind of lucky selling it at that point. I worried that it was going to continue to dip, right? Is it worth me losing money selling a stock lower and hoping that we can maybe get $4 or $5 back when I look at the projected purchase of ARKK, where, you know, we could have bought it for $123 and now it's at $127. Am I losing more by holding longer? And that's the determination I made. A lot of people sold this off yesterday when I should have bought it to try to lose money on their tax return. So the other issue we faced, NRO, our riskiest position, right? Our riskiest position. See down at the bottom there, they cut the dividend 22%. Which, you know, obviously generates a lot of fear. A lot of people want out. A lot of people panic sell, right? But I'm not here to panic sell. I'm here to understand what I bought. And when I see 5 years take an 8% dip, I'm not all that afraid because I know there's a lot of good companies in this fund. A lot of companies we can't afford to buy with such a small account. And when I look at what had been happening here, the trend of these payments we'd been taking advantage of for the last 6-7 months, we were getting into some astronomical returns, 10-15% in fact. Now that it's back down to 5%, above 5%, in all reality, am I that upset about it? Absolutely not. It's a time where we can buy back in and lower our cost. And that's what I'm concerned with. Right, when you can get in now at $4 on a very small fund that we just literally have the repurchase with our dividend payments, I'll take advantage of a stock that for the last 5 years, if not longer, has traded in that $5 to $5.50 range. And know that the panic sell will stop and it will begin to bounce back just like it did when the market took a hit. Now, where are we at the bottom of our portfolio? A lot of green up in front, right? But you know we've got some excess money that we need to spend. Burns a hole in our pocket. Shouldn't be spending it, right? Should be holding. But you look at Land and you look at Gladstone. And to me, when you look at these two companies, same ownership, right? Where are you in buying these? Trying to get everything around that 140, 150 range. You take a look at Gladstone Commercial. I'd be crazy, right? If I'm going to yield chase like I am with NRO, why wouldn't I just buy more of this 8.5% yield? Right? Because Gladstone Commercial is a stable company. They're doing a lot of big things. But when I go look at Gladstone Land and I see what they're doing here, $4.2 million orchard, $20 million farmland in coastal California, $225 million on a note to a facility, $3.5 million farm, right? They're going out in this economy. This is just the past month. And they're spending and they're buying. And they're putting themselves in a position to succeed. So I'm willing to invest long-term knowing, right, that even though this is a 5% less yield than what it would be if I bought into their commercial REIT, that I have a better chance of getting a longer return not only on my money, but more importantly, on my investment. Right? You can yield chase and try to get money back on a small fund like NRO as long as you accept and understand the risk. But if you're going to actually put money in to hold and wait, sometimes you have to look and assess what makes this 3.7% yield more attractive than this 8.5% yield, especially when they're the same companies. You have to look at the business lines that they're operating in and ask yourself, am I more comfortable right now owning Walgreens facilities like Gladstone Commercial does? Or am I more interested in buying things like farming that I know is going to be much more sustainable? And that doesn't speak negatively about their commercial line. It certainly doesn't speak negatively about Walgreens, but you just have to make those assessments of what you're doing and why you're doing it. Because to me, when I look at a 5-year growth rate of 7.32%, I know that I'm not in this for the next 5 days. If I was in this for the next 5 days, I would be one of the people that panic sold NRO. So to me, it's all about trying to best understand where you are and make the best decisions in the moment. I've said for a long time, the market right now is exceptionally high. Having a balanced portfolio is extremely important to me, and I have to sit here and weigh the risk versus the reward on every single purchase. And when I buy in to a fund like NRO, I know the risks are there, and I'm accepting of those risks, but I'm also long-term sighted enough where if something happens and the dividend gets cut, I'm not just going to simply exit, because I know I can still recover. And to be fair, we still have a pretty decent price point on that. And as I just showed you, a yield of that amount isn't all that bad. And the reason we continue to buy into that is because we've set ourselves up with those monthly payments, the $71 over the next 12 months, that allows us to buy into smaller funds. And rather than just sit there and wait 4 or 5 months to where we can accumulate enough funds to maybe buy an additional share of Gladstone land, we have the option, if we want, to buy back into NRO at its less than $4, $5 price point and see the returns from that immediately. That time that you get 3-4 months of their return will equate to much more than buying into land, who essentially gives you the same return for $10 more. So, with all that said, a lot of things to take into consideration, a lot of things that evolve as you grow in investing and understand your positions and your risk tolerance, and understanding what happens when certain stocks turn back on dividends or have other things that affect their price, understanding the climate of every investment you have and how difficult it is to hold up with all of these companies, particularly in this case where you have really about 20 of them to track, can be very time consuming. But if you do it and you enjoy it, the rewards are very much more than just monetary. Love to know your guys' thoughts on this. Appreciate you checking out, and you know I will be back in the week with more commentary.